another episode of Decoding IPOs by FICKMC. Today's IPO is Augmont Enterprises. Augmont Enterprises is hitting the public market with an 825 crore rupees IPO closing on Tuesday, August 25th. With the grey market signaling a premium nearly 50% and day 2 subscription numbers scaling past 15 times. Let's strip away the noise and look at the actual mechanics of their business. Augmont isn't your traditional brick-and-mortar retail jeweler. They have built a tech-enabled, highly transactional precious metals platform. Think of them as a two-sided network. On one side, they run Augmont Spot, an electronic B2B bullion platform where over 5,200 jewelers and dealers across 24 states trade and arrange physical delivery of gold and silver. On the consumer side, they run the Augmont Gold for All app, where nearly 50 million registered users buy, sell, or systematically plan digital gold starting at just 1 rupee. Let us look at how this deal is structured. The price band is set at Rs 750 to Rs 788 per share. The minimum entry ticket for a retail lot of 19 shares is Rs 14,972. Of the total 825 crore rupees issue size, 620 crores is fresh equity. The company is putting almost all of this directly into buying more inventory and scaling up their working capital. The other 205 crores is an offer for sale, where the promoters are diluting a small slice of the equity. The bidding closes on August 25th. Allotments are expected on August 27th, and the shares are tentatively scheduled to list on August 31st. Now, the financial numbers are where this gets incredibly interesting. The revenue is absolutely staggering, climbing from nearly 35,000 crores in FY24 to a massive 94,282 crores in FY26. That is a 42% growth year on year. But because they deal in massive wholesale bullion volumes, their EBITDA margin is just 0.41%, and the net profit margin sits at 0.37%. Usually, sub 1% margins are a major red flag, but because they rotate capital so fast, they actually boast a stunning return on equity of 51%. Now, here's a massive detail that most casual retail investors miss. The actual tradable supply on listing day. While the total IPO size is about 1 crore shares, almost 30% of that is locked up with anchor investors. When you do the math, the actual tradable free float available to the public on listing day is an incredibly tight 8.04% of the company's total equity. Historically, when you have a high subscription demand chasing an incredibly tiny tradable supply of shares, it creates a massive squeeze on listing day. So what's the playbook here? For listing gains, it is a clear subscribe. The 50% grey market premium, the 15 times day 2 subscription hype, the premium anchor book, and the tiny 8% free float makes this a prime candidate for a stellar listing day pop. But for the long term, apply caution. These razor-thin operating margins of under 1% mean any unexpected swing in gold prices or regulatory changes can immediately hit their profitability. Thank you for listening. We will see you in our next episode.